How's it going, everybody? And as always, welcome back to Continues to Tick. It feels a little odd. I'm recording this during daylight hours as opposed to, 6 in the morning when it's dark. But you guys saw the title. I'll get straight to the topic. In this video, I'm going to do my dividend portfolio review just like I always do. But I'm also going to be covering how would I start dividend investing today, right? I got an 8-step approach. I'm going to break it down a little bit in detail, and then depending on the topic, maybe in future videos I'll break them down further. But take this as a schematic, if you will. And I do have to give props to one of the commenters in a video some time ago. They had asked, hey, it's 2024. How would you start? How would you start being a dividend investor? Knowing what you know. How would you approach it? What would you do? So let's start as always with the dividend portfolio review. We're in the Jesse's cash flow portfolio at $76,450.06 currently. And as you can see on the chart here, we have a return of 34.69%, which equates to a total gain of $13,701. And I must say, friends, as a dividend investor, for a strategy I'd say that isn't, just a growth strategy, is pretty good. Did I know when I first started that it would turn into this? No. But you have to start, friends. You start with the plan, you adjust and pivot. Just as I had to adjust and actually decrease my funnel. I kept my frequency every week, but I had to decrease my funnel as life tended to happen and, had to prioritize certain things. But the point is, once you start, to never stop, because ultimately that is the goal. And M1 Finance, ever since they updated this chart, I haven't been a big fan of it, but I continue to work through it. All time is what it shows now. Just to show you this past week, it said I had a 0.9% negative for the week, which is relatively flat. If I look at the month, it didn't give me anything. If I look at the 3 months, it says 11%. It says year to date, 0.93%. And then as for the last 365 days, it says 10% for the portfolio. So Jesse, where are you getting 34%? Well, I believe just from what I've seen in the past, M1 Finance does add the dividend payouts into your overall return. So 34.69% is with the growth of the market in addition to, I believe, my dividend funnel, right? My dividend payouts also going into this. And friends, just like I always give a little gentle reminder, if you ever want to look at my pie, I always keep a link in my description box down below. M1 Finance does a nice way of being able to share pies, right, to each other. So click on that link if you're curious. If you want to see what I hold in my tech sector, for example, you can see, I'll show you here, I hold Nvidia, I hold Apple, I hold Visa, Oracle, IBM, and Cisco. And just like you see here, Nvidia continues to just go for it, 242% gain. That's crazy. $5,000 gain is what it equates to. And clearly it's my top gainer. My second one is actually IBM, followed by Oracle and Apple. Out of 6 holdings here, it's actually my number 4th highest payer. So surprising, right? That Oracle and IBM have been beating out my Apple overall in terms of percentage growth. But that's how the markets move. Like I said early, you just don't know how things are going to play out. So it's better to just be in the game, right? Come up with the strategy, be a participant of the game, and just continue to move forward. And this isn't a monthly review, so I'm not going to go super in depth, but I think it's worthwhile to just show you a little bit of the activity section. So here we are in the activity section. I still continue to funnel $100 every single week on every single Friday is what it is for now. And that is my adjustment moving forward. And like I mentioned in my video before, yes, I was trying to funnel $150 every week. But because this new job opportunity where it's like a promotion, but I would probably have to take a pay cut, as part of this promotion. Long story short, I adjusted my funnel, right? From 150 where I was trying to get to and keeping it for a while to 100, just in anticipation of taking a pay cut, right? And being ready to take this job promotion. It's like one step back and sideways to then eventually take a couple steps forward in my career. Just as I focus financially on my retirement, I also put a lot of energy, I'm currently 28 years old. I put a lot of energy into my career development and my career path. And this would be the next step for me to eventually, maybe 5-6 years down the line, make a significant more amount of money, right? Which then I could leverage along with my time back into this dividend portfolio, back into my finances, back into my financial future, right? And my retirement. So it all kind of goes in hand. It's all energy that has to go, to the future of myself, right? One day I will thank me, I think, for all of this. The idea is just to think about it. And as I speak about it, hopefully it'll spark you to also think about it. And that's the whole point to this story. That's the whole point to Continues to Tick. It's just showing you guys a case study, showing you guys an example of time continuing to pass and someone trying to plan for it, trying to leverage it, showing you the systematic development of a dividend portfolio, speaking about career development, and hopefully eventually the idea is to also get into real estate. And I'm looking forward to that day. I continue to say it's coming up, but I can't put a date on it, but it will eventually be part of this channel. It is coming. Just wait. And so that is it for that part of the video, right? Telling you guys my dividend portfolio, giving you guys a review. So we're now back to where we started, right? How would I start dividend investing today? And just before I started this video, I put a lot of time into thinking about this, and I broke it down into 8 steps. And these are 8 steps that I think will be beneficial for you, right? If you're looking to start a dividend portfolio, maybe if you've started one, maybe it's just something to think about. Like if you were to guide somebody else, are these, somewhat similar 8 steps that you think about, right? If you were to tell somebody how to begin, right? That's kind of what I prompt you guys to think about. So let's see, right? Let's see what I came up with. So as for the first one, friends, let's highlight it here. I put shape mindset. So this is what I consider to be foundational work. The very first thing before you begin investing for dividends, you have to mentally prepare yourself, right? Because this is a very specific strategy, I would say. A lot of young people, I was tempted too, right? You want to see money come quick. You want to make money fast. When you're a dividend investor, you got to understand it's a mindset. It's a slow and steady approach mentality. It's foundational work that is most prominent, the most important. Step 1 to creating a dividend portfolio is creating that sense of alignment of your start goal to the end outcome and how long this may actually take. So that's why I say it's a shape mindset. This isn't a get rich quick scheme, right? This isn't getting rich overnight. This isn't buying Tesla, 2 years ago and holding it and then boom, it explodes, right? Being a dividend investor is coming up with a plan, engaging in it, starting in it, and allowing it to play out, not just for years, friends, but for decades. For decades. This is something that is brewing in the background of your life. It is slowly shaping and building and morphing and building up momentum in the background of your life. And eventually, towards the end of these steps, I'm going to tell you, you don't have to think about it. It's actually better if you don't think about this. Again, this is part of mindset and shaping this mentality of being a dividend investor. If I had to summarize it, friends, being a dividend investor is literally watching grass grow in real time, right? But let's say this grass is growing for the duration of your life, right? The second you start, it's like seeds. You're just barely putting them down in soil. By the end of it, friends, you get grass. It's soft. It's something nice to step on. That is the end goal. You can also say it's like a plant, right? A tree planting a seed. It's a tree that grows. Like what's the saying? The best time to plant a tree was 20 years ago. The next best time is today, right? So you have to have this mentality that this is going to be a long, long ride. And that's why when it comes to this channel, I'm in no rush. I make these videos every 2 weeks now. I just have this working on in the background to have here on YouTube. And I just wanted to show from the second I started, from decades from now, this is the outcome. And I'm hoping that outcome will be significant, right? Substantial. $1 million dividend portfolio. And for those that join the journey, I imagine you're on a journey of your own. And that's why, in a way, we can relate. That's why I see, maybe 300 views per these videos. Maybe there's something that attracts you here. And I think a big part of it is the mindset that we just share. It's hard to relate to growth investors. It's hard to relate to fast money makers. We take it slow here. It's a journey. It's a process. It unfolds over time. So that's why I say number 1, here is shape mindset. It's foundational work. You need to have this in alignment before you begin to become a dividend investor. If not, you're going to become a dividend investor for the wrong reasons, and then you're going to quit. You're not going to see it through. You're going to waste your time. That's why I say for the first thing is shaping your mindset. And let's go to number 2 now. So for number 2, I put decide on individual holdings or ETF/index funds. The main thing to this, friends, is do you want to be hands off or do you want to be hands on? And that is just it, very bluntly. If you select individual holdings, you have to be more hands on. You have to be on the lookout for dividend cuts, what's going on with the dividend, right? Every quarter, or how often they pay it out. You don't want to just neglect the holding that you have and find out, 3 years from then that it's cut its dividend a long time ago and you haven't even been getting paid dividends, right? Like that'd be a nightmare. So there's some level of responsibility, right, to having individual holdings. If you're investing for ETFs or index funds, it's like a managed thing already. You don't really have to put too much more energy other than buying it, pulling the trigger to buy it and purchase it, buying more. Like you don't have to worry about it. The pro, right, to individual holdings is there's like a level of fun to it, right? You get to choose, you get to kind of decide, and you get to hold the ones that you kind of care about and things like that, right? And when I say care about, I'm talking about stocks, right? Individual stocks like P&G, right? Procter & Gamble, Pepsi, Coca-Cola. When it comes to ETF and index funds, oftentimes there's a fee. That's a con, right? It's giving away a little bit more money than you want to, but the pro to that is you have something that's being managed for you, being looked out for you, a little bit less stress for you, right? So at this point on step 2, I want you guys to think about, do you want to be more hands-on or do you want to be more hands-off with your portfolio? Where is your mental bandwidth? How much do you really want to invest mentally, and energy-wise into this? And I make this step number 2 because I think it's important to understand going in where it is you stand. And you don't have to be one or the other. You can do a little bit of holdings and mainly more ETF and index funds if you want. There's a ratio to this. There's a balance to this. For me, my portfolio is mainly individual holdings. One ETF and one index fund, right? With a little bit there. But mainly, I enjoy having my own holdings. I enjoy making my own decision and living by it, right? Whatever the end result is. I just get some enjoyment out of it, right? Like for example, getting Nvidia and seeing it just blossom, right? Like that is fun to me. So it really is just personal preference, but it's just something to think about. And that's why I put it at number 2, because I think it's something you need to think about pretty early on. And for step number 3, friends, this one's pretty simple, but it does take a little bit of research. It's just choose your stockbroker. For me, when I show you M1 Finance, that is my choice. For a dividend portfolio, there's Schwab, there's, Vanguard, there's other ones out there, probably Webull too. This just depends where it is you want to kind of, put your money in. Like what platform do you trust? Which one do you enjoy using the most? Which one is easy for you to understand? Those are just things for you to kind of play around with, do some research, and just decide. So I put that number 3. And as far as number 4, we'll highlight that one as well. Number 4 is I want you to think about, right? I want you to choose from a taxable or a retirement account. There's a lot of videos on YouTube that tell you which one to choose first, right, before the other. For me, it was preference, right? For me, I had a pension working for the state of California. I still currently contribute to a pension. My next job may still provide this same pension. So the way I look at my retirement, at least like on the 3-pronged stool that they say, my pension is one of the pillars here on this 3-pronged stool, right? So for me, I feel like my retirement is pretty set with the pension, right? It's kind of taken off my shoulders. So for me, I actually like investing in a taxable account. So far, I'm about to be 4 years in. It hasn't really bitten me too hard in terms of taxes and things like that, right? I also keep in mind, I don't sell a lot in my portfolio. So not selling, being in a taxable, for me, that is my strategy, right? Because every time you sell, if you sell at a gain, you have to pay taxes on it. If you sell at a loss, you still have to keep track of it. So for me, my strategy is just to not sell unless I really, really have to, right? So choose between a taxable or a retirement. In a taxable, there's no limit. You could fund as much as you want. I just liked having the option. In a retirement account, you're somewhat capped to how much you can put into it. If you have a 401k or a Roth, they have a limit to it. They also have an age limit to it when you're going to take money out. For me, I've always wanted to retire earlier than the age of 59 and a half. And I know with these accounts, there's workarounds in terms of the money that you put in. You could take some of that out. But ultimately, I didn't want any restrictions. So that's also one of the reasons why for me, I went into a taxable account. I didn't want any restrictions to how much I could fund it. I didn't want any restrictions as to how much I could pull out. For me, that's why I chose taxable. It's been working for me for now, and I don't plan on changing it anytime soon, but it's a decision that you guys have to make. Being in a taxable isn't the wisest thing always. Most people would argue against it. A lot of people argue for a retirement account. I think if I didn't have a pension, I might look at things differently, but it's definitely something you guys would need to, put thought into and decide upon early. So right after you choose your stockbroker account, decide where it is you want to put your dividend portfolio, whether it's in a taxable or a retirement account. So moving forward now at number 5, friends, this is where I say now you can buy. You've shaped your mindset. You've decided on your ratio in terms of individual or ETFs or index funds. You've chosen your stockbroker and you've chosen whether you want to be in a taxable or a retirement account. Now you're pretty much ready to make that first purchase. So make that first purchase, whether it's an individual holding or an ETF or index fund, whatever it is, make that first purchase here at step number 5. And if I was starting this here, right, my dividend portfolio here at number 6, this is when I would put energy and decide on my funnel amount and my frequency. For example, when I was showing you guys my dividend portfolio, I told you I was funding at 150. I recently adjusted to 100. For me, I do $100 every week. And I do it at a frequency of every week, right? $100 is my funnel amount. My frequency is every week. That is what I decided upon. I like to do that because it helps me dollar cost average on a weekly basis as the markets have continued to move, whether they move up or down. For me, I noticed that helps, right? I'm also funding $100, which is a decent amount. So doing $100 every single week really does kind of help spread it out, right? Throughout the year, throughout the month is the way I look at it. And then step number 7, friends, this is what I call life. It's like you got the momentum going, right? You made your first purchase, you know what your frequency is and your funding amount is moving forward. Number 7 here is don't be afraid to adjust and pivot. When I started my dividend portfolio, I was only 24 years old. I'm 28 now. I'm going to be 29 later this year. Right? Continue to age and get older. Life is happening for me. Different stages of life, right? Continue to go as life continues to happen. For me, I'm older now. I'm in a slightly different stage of life now at the age of 28 than I was when I was 24, right? So because of that, I've lived a little. Because of that, I've had to adjust and pivot. When I first started this dividend portfolio, I was very set on my ways. $2,000 every month, and I can't change this. I can't deviate. I must. But life happens, friends. Life tends to find a way to humble you. And over time, I got humbled, right? Now I invest $100 every week, as opposed to, I think before I was doing like $400 every single week or something like that, right? Or was it $500? Maybe it was $500 every week, actually. But the point to saying that, friends, is there's going to come a moment that as you go about being a dividend investor, you're going to have to adjust and pivot. So don't be afraid to do that. And then you adjust and pivot a little bit. You let it play out a little bit, see how that responds. And then you adjust and pivot again if you have to. The main idea with this is to not give up, to not quit, to rather adapt. Adapt with the stage of your life. Adapt in order to keep your dividend portfolio moving and alive. And just continue, right? Continue. And as for the very last step, friends, this is actually one that is pretty important. It has always taken me a while initially, right? At the very first starting of this portfolio, it took me a while to adjust to. Because when I very first started, I was just always looking at my portfolio, always looking at my dividend portfolio. How much do I get paid now? How much? And the whole point to this, friends, is that's okay at the start, but don't do that forever. Eventually, you just want to forget about it. And it may sound bad, but you want this portfolio to just be something else that is happening in your life in the background. You don't want to just obsess over it, because as you obsess about it, you get bored, you have these desires, and you're going to want to make changes to it. You're going to want to adjust and pivot so much to your dividend portfolio. You're going to be going in circles, right? You're going to get no traction. You're going to be making decision after decision and not watching how it responds, not watching how it plays out. And ultimately, that's going to stunt your portfolio. And honestly, that could really have a negative impact. So honestly, the biggest key that I can give you here at the end, once you got everything in motion, is just forget about your dividend portfolio. Like for me, friends, I check it once a week at the most. If not, I check it every 2 weeks when I make this video. And otherwise, I do get notifications for my stock holdings, right? Because I hold quite a bit of individual holding. I have it on Seeking Alpha for every single holding that I have to notify me via email, whenever there's a dividend payout, any company news. Very easy to monitor that way, right? In the morning when I open up my emails, company so-and-so this, company so-and-so this, delete. And that's how I kind of keep track of all my holdings. If you're curious, maybe I'll make a video on that if you guys are interested. But that is tip number 8, friends. And that is all my 8 steps as a whole. I'm curious to know if you guys agree with any of these or what your thoughts are. But ultimately, this is just a schematic. It is just a step-by-step, process of how I would approach being a dividend investor now in the year of 2024 if I was to start knowing all the information that I know now after doing this for a couple years. And just before I go, friends, I want to give you a tip or maybe just something to chew on. And it is the understanding, right, from what I've seen, is that the hardest part of this all, friends, is the research on which stocks or ETFs or index funds to buy. That requires the most time. When you go about becoming a dividend investor, and probably even now as a current dividend investor, the hardest thing will always be on that decision of which stocks to buy, right? Which ones to hold. That will always take the most of your time. But everything else, friends, that I broke down in the steps here, these are all things to think about. But when you're deciding on individual holdings or ETFs or index funds, and within that step deciding exactly which ones to buy, that is the hardest part. And it's okay. You're going to be overwhelmed because there are a lot of options out there. But that's what YouTube videos are for. On YouTube, there's a lot of people talking about a bunch of different holdings all the time. Reddit is around. You can look at my dividend portfolio. There's a lot of resources out there. And I can't tell you exactly which ones to buy. That is subjective to you. So that's why I kind of kept my steps pretty vague. If you were curious why, hey Jesse, these are all pretty vague. Well, they're vague for a reason, right? I'm not a financial advisor. I'm just breaking it down in a very schematic way of how I would invest for dividends, or how I would be a dividend investor, today, right? Step by step, what I would do. But as always, friends, thank you guys so much for watching this video. Hit the like button if you enjoyed it. Hit subscribe if you want to continue to be around for the journey. I continue to be here every 2 weeks for now because that's what feels right. Maybe eventually I'll be here more often. But this journey, friends, it won't be stopping anytime soon. I got a long way to go. I got decades. So join the journey, relax. We'll be here together. I know you're probably on yours. I'm here on mine. But we're dividend investors, friends. It's fun. See you guys on the next one.